Hello again, welcome to another episode of the Uranium Market Minute. Today is Thursday, February 3rd. This is episode number 73. My name is Justin Hune. I'm your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you again for tuning in. As always, nothing in this video is intended to be investing advice. I'm not your financial advisor, and this is not financial advice. Please always do your own due diligence when it comes to investing, and always take responsibility for your own choices. All right, I've been out for a couple of days, having not done a market minute since Monday. We had a very busy couple of days putting out February's monthly Uranium Insider Pro newsletter. This is a 35 plus page report that we got deep into the weeds on what's going on in the sector, the weakness we've seen in the sector, and of course we cover more in depth all of our focused list holdings, the positions that we are currently holding. And as I mentioned in previous episodes, the last couple of weeks, we do have a sizable cash position here, and we are looking to deploy that shortly. So if you are a member, please keep your eye on the bulletins coming in. If you're not a member and would like to get a sample of our content, click the link in the description below. You'll get access to a free sample of a previous month's newsletter, get an idea of the type of content that we put out on a monthly basis. And of course, we also have bulletins that go out intra-month based on new trades, positions we are entering, positions we are exiting, or market moving macro information. And of course, we do monthly members only webinars that I've mentioned in the past. We have another exciting guest coming this coming month. All right, so let's jump right into the daily scoreboard. And as I mentioned, it's been 3 days since I did a market minute. The last one was on Monday. So the data coming from the scoreboard today will be for a 3-day total, Monday, Tuesday, and yesterday, which was Wednesday the 2nd. The spot price of uranium now just sitting flat here, $43 a pound. We had the spot price jump up in the month of February, actually being the positive. Spot vehicle was in the positive for the month of January, excuse me. And so now when we saw it, get ticked down a couple of bips in the last few days trading in January, as we expected would happen, of course, in that typical month-end fashion. Now we're seeing it stabilize here. We're seeing SPUT gather a little bit of steam with the URA purchasing. Get into that in a second. So it looks like we're seeing some stability in the spot market. However, of course, the equities are getting hit today on two things: broad market weakness and the URA rebalance. But I'll talk about that in a bit. SPUT over the last 2 days raised 26.1 million in new capital, and they purchased another 100,000 pounds of uranium. So yeah, the market is kind of watching and knowing that URA is buying SPUT here. And so there's been some market participation along with that buying. Now SPUT is actually down today in the red like everything else in the sector, but the last couple of days it has held up quite nicely, has been at a premium to NAV. In fact, yesterday they closed at a 2.57% premium to NAV. However, today it's down just about that same percentage. We're now down below that 1% premium that we need for them to raise capital. I'm not sure if they raised this morning at all. Either way, they seem to be Johnny on the spot in terms of as soon as they're at a 1% premium, they are issuing shares and raising money. They did purchase 100,000 pounds, like I mentioned. That was 2 days ago on Tuesday. So good to see that they're in the market a little bit. However, their treasury is now at 45 million in cash. They might do a little bit more buying with that, but they're likely to keep a decent chunk of cash in their treasury and wait until they can issue shares more heavily, raise some more capital in order to come into the market a little bit heavier. They now sit on a total of 44.1 million pounds of uranium. So the year-to-date total stands 2.8 million pounds purchased, 145.4 million in new capital raised. That's year-to-date, just over a month. They have raised 1.1 billion since their August of last year, August 2021 ATM launch. All right, turning to the ETFs. URA has issued another 200,000 shares since our last market minute, since Monday. URNM did not report any changes in outstanding shares. 200,000 shares of URA gave rise to 2.9 million in mandated buying. Of course, that offset a little bit by the mandated selling that they've had due to the rebalance. So they're adding a sizable position in SPUT, along with 7 other smaller cap companies that have made it into the rebalance this year. And so they are selling down everything else that they're holding in order to make room for those new entrants, in particular with SPUT. So what does this mean? 200,000 more shares of issued outstanding shares for URA. Year to date, URA has increased their outstanding shares 3.74 million. URNM 650,000 shares. That's 117 million in mandated buying in 2022 alone. So again, I've highlighted this multiple times. This is a very interesting, somewhat anomaly here, in which the sector has been selling down, yet the outstanding shares of the ETFs are now basically at all-time highs. So I again will reiterate, we believe what this is some smart money positioning. Are they coming in super heavy with a little over 100 million in buying? No, of course. It's not absolutely huge money when it comes to institutions. However, that's clearly not retail money. That's mostly institutional money, in my opinion, due to the size of that fund flow. And it's not enough funds flow to actually move the sector, really, as we've seen the individual holdings and the ETFs themselves selling down. But the increase in outstanding shares, something's going on here, and we're very pleased to see that. The combined AUMs of the two ETFs now 1.81 billion, still quite a ways off those November highs, even though we're at outstanding shares record highs. We're still seeing negative action in the sector since that high in November, of course. And we continue to believe that we're going to see some cross currents in the sector until the rebalance is finished, which is the 7th. The 7th would be Monday, this coming Monday. So we're probably going to likely see some more selling as we are today, probably into tomorrow, and they will finish it off on Monday. It's just kind of typical fashion for URA. This has happened multiple times in the past, where technically the rebalance will last for 2.5 weeks, but they wait for the last 3 or 4 days to do it all. Pretty sloppy, in our opinion. And this happens, every rebalance they do, it happens similarly. So it's just something we were fully expecting. If you were trading around this, you should have expected this as well. We do not trade around this, although it's quite interesting that how well SPUT is holding up relative to the rest of the sector. I think that historically speaking, the valuation of the mining stocks is at or near its lows relative to the metal. So that's something interesting to note. Let's really quickly take a look at the charts. URA having a really nasty day here, down 4.4%. The volumes aren't huge, but it's definitely some pretty negative trading action. And again, I believe that the selling we're seeing across the sector has mostly to do, obviously, with poor sentiment, with broad market influence, but it's URA rebalance selling that's hurting the individual companies most. Either way, not a pretty day for URA, still floating just above that trend line that we barely held last week. And we'll see if that holds here. 50-day, the 20-day moving down pretty sharply. The 200-day flattening, though it slightly started to tick up again with a little bit of positive action in the last week. I'm not sure if what we saw last week was kind of a dead cat bounce there. If we're going to see some continued negative action in the sector, if it breaks below this trend line, I would expect it to fall all the way down, likely to this line in the sand. Again, August lows, and what has happened since August? So as you all know, we are long-term holders in this market. We are long-term investors in the uranium space. We focus on the macro fundamentals for the long term. Now, I cover these daily moves because this is essentially a daily podcast, and we watch this stuff every day. So that's why we share kind of our brief interpretations of what we're seeing on a daily basis. And sometimes you'll see big moves or important news that comes in on the daily that's important to talk about. But really, we're in this for the long term. So what we're seeing here is valuations of the miners represented here by URA in this case as barely above the lows in August. And the lows in August, first of all, this was very negative sentiment. Retail was throwing in the towel because they knew that SPUT was coming. They didn't know what to expect yet of SPUT, and they expected some front running, and we got zero front running. What we did get was strong moves in the spot price due to SPUT's buying immediately when their ATM went live, and then the sector just absolutely lit up. As you can see, this move in August into mid-September from mid-17s all the way up to $28. So we had, a super huge move over the course of 4 weeks in the entire sector. Now, in our opinion, what that was proof of concept for SPUT. Okay, that's what that was to us. And so they figured out what they could do, and then they pulled their foot off the gas a bit, and they continue to have their foot off the gas. Of course, their ability to put the pedal to the metal has everything to do with the flows, and if the flows aren't coming into that vehicle, then it's not happening. So the flows are still on the sidelines. Either way, Sprott obviously has a huge resource of clientele and a huge reach in the sector. So now that their NYSE listing is in application status currently, it's likely that we're not going to see another August move in the short term. What do we think about it? We really don't care. We are in accumulation mode here. So to wrap this all up, we're seeing miners barely off the lows of August. And what has happened since then? We've seen the uranium price up. Let's see, it was just above $30. Now it's just above $40. So what is that? That's about a 35% increase in the spot uranium price. We have the existence of SPUT, and we know what they can do. We've had the green EU taxonomy, which I'll speak about a bit in the mailbag section, confirm the inclusion of nuclear. We've had China announce they're going to build 150 reactors by 2035. Gosh, I mean, I can just keep going. But really, so my point is that the fundamental picture between August of last year and now is vastly, vastly improved, yet the miners are barely off of those levels. So what does that mean to us? This is an unbelievable opportunity. And so for us as long-term holders, we're salivating at the mouth here, seeing these opportunities. Does that mean that we won't go lower? No, I do think it's possible we might go lower. If we break below this trend line and we go down near or to this trend line, that would be a load the boat, back up the truck situation. So we're watching out for that. Sprott Physical Uranium Trust, like I said, is trading down today, just about a bit more than they were at a premium to NAV at the close yesterday. So there's certainly less than that 1% premium to NAV. They're likely not issuing shares in the market. Volume is negligible on this down day, as we saw the volume rising on those up days. And if you're looking at the MACD and the RSI, we've been in the sideways action for many, many months here. And this thing just continues to coil. We think the downside here for this vehicle and for SPOT is very minimal relative to the potential on the upside. All right, so I just want to jump into a mailbag question here about the EU taxonomy. Justin, I heard that nuclear has been included. What does this mean for uranium investors? All right, so what we're seeing in terms of some of the detail for the inclusion of nuclear and gas, but of course our interest here is in nuclear, into the EU taxonomy. There are a number of requirements for accessing that green low-cost financing for nuclear or anything else in the EU taxonomy, but these requirements are specific to nuclear. Those requirements include, but are not limited to, basically the country of interest that wants to access this financing for a new nuclear build would have to have a long-term centralized repository for the nuclear waste. Okay, so that's one limitation. Now, some countries do have that. Sweden has just built one. Finland has one, but most countries do not. In many cases, and this is the case in the United States, the spent nuclear fuel is held safely in above ground storage facilities in casks that are thick-walled concrete and steel. It's highly regulated, and the accidents are basically non-existent for nuclear waste. And so there's a number of countries that are pushing back against this requirement, saying this is going to limit the growth of nuclear because some countries might not be able to quickly enough come to a consensus on a centralized location for a repository. And they're right in that estimate, okay? We're also hearing that there might be a requirement for accident-tolerant fuel. Accident-tolerant fuel essentially is still mostly in kind of a test phase. This is not something that's going to be able to be rolled out en masse in the short term. So a number of these requirements are likely to limit the ability for nuclear to access that green EU taxonomy based financing. Does that mean that there won't still be nuclear builds in Europe? Of course not. Of course not. But what it does mean is that the most likely outcome in terms of the inclusion of nuclear and therefore uranium in the green EU taxonomy will be the classification of nuclear as green across Europe, okay? So I want to read a quote from John Ciampaglia, the CEO of Sprott. So he mentioned in an interview in a recent TD virtual mining conference that was at the end of January, he mentioned that he made it clear to him that final approval of nuclear in the green taxonomy will usher in European institutional money. He says, quote, "We think that EU taxonomy, which includes natural gas and nuclear, will get passed. And as a result of that, we have had institutions in Europe tell us flat out that once that gets approved, it's game on for them." Okay, so we think that the most likely positive benefit from the inclusion of nuclear in the EU taxonomy will be investment flows. When will this happen? We don't know exactly. We know that the accessing of green financing would not begin until January 2023. However, the labeling of nuclear as green could happen based on the official signing and confirmation of and passing of the draft of the EU taxonomy. Okay, and that's expected in the coming months. So we could see some funds flowing into not only SPUT, but into uranium and nuclear in general coming from the EU once they get the EU taxonomy blessing and that green label. So that's obviously a positive for the sector going forward. In the meantime, we continue to chop sideways. We continue to see some downdrafts in the broad market. There's some overvalued growth stocks, tech stocks that have been hit pretty hard on earnings. Netflix started us off a couple of weeks back. Actually, in my opinion, was kind of a catalyst to pop a broad market bubble. Broad market, of course, corrected and then came back a bit and was selling off again after we saw another couple of really bad sell-offs coming from tech stock earnings. PayPal was one. Facebook fell, 25% in after-hours trading after the reporting of their earnings. So a number of these trades were, or a number of these stocks were trading and were very lofty based on, kind of a pandemic trade. And now that the world seems to be slowly going back to something resembling normal, a lot of these stocks that had quite the bid due to the pandemic are now coming back down. So that's not something really all that surprising. However, it's obviously having an effect on the overall markets and of course, uranium in particular with some outsized beta here. I don't think that we're going to see huge moves until we start to see the spot price moving. So in the meantime, we'll likely find a bottom at some point in the near future. However, we could continue to see some sideways chops and accumulation. And like I mentioned, we're in this for the long term. So as things like the EU taxonomy, like the expected NYSE listing for SPUT coming in, Q3, and obviously just the growth factors for nuclear in general out towards the end of the decade, all of these elements have a positive effect on the overall fundamentals and our conviction in the trade. So when we have moments of chop and accumulation like this, then we do just that, we accumulate because we're in this for the long term. All right, hope everybody's doing well, and I will see you tomorrow. Until then, cheers.